Good evening. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Thursday, the 7th of December, 2023. So tomorrow morning, we're going to get the all-important jobs report. We saw jobless claims come out today, and the claims numbers today were mixed, as I see it. You added 1,000 claims on the weekly, but you took away 60 some odd thousand on the continuing. So people are still finding that they can get jobs. However, we're still seeing that the rolls every now and then are going up. They're not down to like 100,000 claims. They're still up here in the 200,000 level. Now, tomorrow's going to be the real interesting day. Even if you get a report that's disappointing in jobs, they're looking for 180,000 new jobs. That includes about, if you add the Actors Guild, who was there on strike, and the UAW together, maybe 40,000 people came back to work for this report. So you're looking to have about 180,000 jobs reported. If you subtract that out, you get a whisper number that's a lot lower. Now, what if something came in near 120,000 jobs? What would that do to the marketplace? That's what you got to ask yourself. You got to keep asking yourself, is there a surprise waiting? Because all that you keep seeing going on is interest rates falling, the market saying, forget what the Fed says, here's what they're going to do. And the market's already pricing in for next year that they're going to take interest rates down between 1.25% and 1.5%. The market's already built a bunch of that in. You can see it in pricing. And the question is, what happens if this gets derailed just a little bit? And that becomes the big question. I was reading a report by Morgan Stanley, and in one part of the report, they go, you could easily be 2.5% before you know what's going on again, but they think you'll end up next year at 4.25%. Well, roughly that's a 1% drop from here, and that's reasonable probably as to what people look like, but how fast you get there and so on. Keep in the back of your mind, nobody's got this year right. When you go back and you look at how 2023 came, nobody got it right. I gave up. I know I'm right because I gave up writing yearly predictions a long time ago. I realized early on in my career, it was required of me. I was a learning broker. You send your interns, they do the grunt work, then it comes under the firm name, you published it, you're the head guy. Forget all that. What I've learned is you take the market a month at a time maximum, and you start cutting it in from there on weekly charts, and then you go to your daily charts. I do not believe in day trading. I think you know that. It's not that if I could, I would, but I've never been good at it, and I'm sure there are people that are. Swing trading, yes, I love that. Swing trading is when you're catching those moves. They can be 3 days, they can be 2 weeks. That's a swing trade. And do I like longer term? Of course I do, but that's what you use your weekly charts for. You cannot make your daily chart work for the weekly. What happens on weekly charts is people go in and they get wrong the market and they call it an investment. Or they go into the daily chart, I'm not going to take that loss. This is such a good stock. Why would I take a loss on it? It's called investment. Losers become investments. Winners because you made a right trade. It's just how it seems to work with people. Okay, think about what I'm saying. Does it apply to you? It'll be interesting for you to ask that question. So, as I see the report tomorrow, why go through it? Let's see how it comes out, what the immediate reaction to it is, and by day's end, the reaction. That doesn't mean you don't trade it during the day, but that's what I'm looking at. Was today an interesting day? Most certainly was. Number one, Amazon coming back up, challenging back to the upside beautifully. Schwab got beaten up, if you'll remember, but it's starting to act a lot better. It certainly has found the home in the $60 range. Netflix, I believe that Netflix is looking pretty darn good here. I like some of the ideas from others that I'm looking at to see too. Now, one of the things that you and I had talked about was Affirm, and we've been covering it. And I'm going to come back one more time. Some of you have written, write me on my YouTube channel if you want me to cover a specific stock. Don't make it such a small stock that nobody's going to follow it. I won't do those. A couple of you have written. Today's the next day, because when I record tomorrow, that's the one I'm going to pick to do the weekly charts on, and then for the next week, okay? So we've got one of the Hawaiian airlines. Somebody asked in a uranium stock so far. More people will ask. All right. So in Affirm, I had come out about a week ago, like that was around here. The market has since taken off in a beautiful way. I gave you all the reasons that I like the stock. You can see that the trend is certainly to the upside. You've had crossovers where the 18-day average in red is over the green, which is the 100-day, which is over the 200. So it's a classic bull setup. The play began right here, and it has since exploded to the upside, as it should. I'm watching what the consumer's doing with this credit. We had reports come out this afternoon. For those of you that get my full market research, that report is in it already, and I give you commentary on it in addition. But you can see what's going on. People are loading up on this revolving credit, which is what Affirm basically is at the end of the day. And that's what they're paying, and these rates are not cheap. They're pretty high rates, but that's what people are doing. Okay. They will get spent out. You got to be careful. So each time we've hit the black Bollinger Band, this is the band, you've gotten over it for maybe 2-3 days at a time, then you come back and challenge it, then you go and redo it. Classic bull market formation, as long as you keep the slow stochastic embedded. Embedded means the red and the blue lines that make it up under my formula. My formula is going to be different than the one that you are using. I can tell you that now. And it's not the how many days do you have in it. Is it a 14? Is it an 18? The 5 and the 3, if you're a student of it, you know. It's inside of the formula that I made the changes, and I don't share it here. I do share it with my subscribers. They're more than welcome to it. So as I look on there and I see where the market is, it's still embedded. So until the red line closes underneath 79, I think the market keeps getting bought on these breaks and moving to the upside. I see nothing wrong with that. 42.24 looks like the next high area. Now Rivian, we should go back and take a look at what Rivian did yesterday. Yesterday, Rivian had a huge day, but it didn't close in the top part of the range. It closed at the very top of the Bollinger Band, and you can see that right here. And then today, the market closes back, but it's in yesterday's range. So what you have is a market that is bullish, pushing on the band. It's not a runaway market in any stretch, and this is not an upside breakout the way I define a breakout. If it keeps going, 2060 is a potential target. Now the support comes in at a combination of the 200-day average at 1795 all the way down to the 18-day average of closes. It's also overbought. I wouldn't be telling my clientele, hey, let's just jump in. This is the place to go. The gasoline fund. So let's go back a day on this one too and get a feel for yesterday. If we look at yesterday, you see that the market had a range of 59.72 to 58.22. It closed at 58.69, not in the bottom quadrant of the market. A lower close, but not in the very bottom 25%, which is what I like to see of the market if I'm getting a downside breakout. So what I'm getting is a forced move out. These have a way of coming down and then biting you as they try to get back into this. Certainly, if you were to take out this high, you'd say something's amiss. But at this point in time, everybody's dumping everything in energy. No matter how they try to hold up the crude, you get 25, 50-point rallies, nothing there. It would probably take the attention of OPEC Plus to call an emergency meeting later this month and say, here's what we have to do. Let's support prices. Are they at that point? I don't think they are just yet, but they're talking. I'd bet on that. In any case, still very bearish, but oversold, trying to stay outside of the Bollinger Band. The financial services. This market has lost its way. It lost its bullish embedded reading. So let me walk you to this. It's very important. This is the close of business today, Wednesday. This is the close of, let me take that back. This is the close of business Tuesday. This is the close of business yesterday. Yesterday, you lost the embedded reading. I said to you yesterday, I think prices then are likely to make, before they get over these highs, try to get back to the 18-day average of closes. We'll see if I'm right or wrong. Certainly tomorrow is going to be a rock and roll day off the jobs number, because people are going to extrapolate it right away as to what it means for interest rates. Lower interest rates are good for banks. Remember that. They can do more business. Right now, if you didn't do your financing during COVID, how many people do you think are going out there as corporations and going crazy in these markets? I don't think a lot. So that's part of it, and this is a financial service number. When you come to XLI, still very bullish in this. This is the industrial sector. I stay bullish until the red line closes under 79. These are the pullbacks where traders often take a look on a daily chart and buy it. I always look at the weeklies to see where they're at. I can't show you both here. In my morning subscriber videos, I do that often. When I'm coming up with a new trade, new market, I want you to come in. Often I'll go to the weekly chart with it so that you see that the two are at least together, or what we're fighting if they're not together. Are you up at a Bollinger Band where you never want to be a new buyer, things of that nature, or a seller for new positions down here. But this has been a bull market. You're not looking at many markets you want to get short. AMC. So as you know, I think the battleground is going to be the $7 mark. I've been saying that. You lost the embedded reading. When you did go right to that 18-day average to fight the battle. There is no trend to work on here. You have a market that's trying but hasn't succeeded in just saying, I want to go sideways for a bit. Not quite there. Then we get to the consumer, and this is the RSPD. Again, you're embedded. Am I bullish or bearish? You know I'm to the upside. And look what's happening. The 18-day average at 43.20, the red line, just got over the 200-day at 43.11, and it might crisscross the 43.21. What is the classic bullish setup? The shortest term average over the medium term, the medium over the longer. 18-day is certainly shorter than 50 or 100, and the 100 is certainly shorter than 200. That's what you're trying to do, which means not that it has to pick up and run. What it has to do is hold that on the breakbacks. That's what you're looking at. But now the nature of this market is changing, and we keep hearing the consumer is dead. That's not what this chart is saying. And as a chartist, until it's proven wrong on the chart, I don't have much to say. Would I tell a client to buy into the Bollinger Band, even with the embedded reading? Never. Because you only stay over a Bollinger Band 5% of the time. So why would you do that? It's one thing to buy the pullbacks. It's a very different thing to buy right into that band. In the home builders, so I have clients that I must tell you in my other service, my subscriber service, they have been in this market since back over here in the congestion. We've got a nice lead in the market. You know, so every now and then I win, right? In a recommendation. And the market got up to the point where I've now told them to take off another chunk. Don't give up your position, because we might have to build on it. We'll see what the slow stochastics do. Tomorrow's a real important day, because it's going to give us an idea that interest rates get ahead of themselves. We're going to get maybe a friendly report where your jobs number comes in a way to hurt jobs growth. What will the market say about that? What will the market say if the jobs number, instead of 180,000 new jobs, is over 200,000? Wouldn't that be telling the Fed, hey, you got to keep going? What will that do to interest rates? This is in play tomorrow. Make no mistake about it. You know, you want to get through that morning number to have an idea where you're at. As for the energy market, you know, if everybody's talking world recessions, you're seeing it in the energy. Now, this is a downside breakout. You were in the bottom quadrant over here yesterday and today. Lower lows in both day, bottom quadrant, coming out of sideways action. So until the market gets back over 86.03, I think that the bears that aren't in will look at bounces aggressively to be selling. And certainly the area where I see is the resistance based on what I know right now. This is before OPEC would meet and pull something weird out of the hat. 84.11 to 84.53, the resistance. Is the Biden administration in crude buying it? They promised they would. I make you another promise. They will find a reason why they can't. You could never tell the truth if you're in that administration about energy. There is no chance you're going to do it. They will tell you that, yes, they said it, but the caverns aren't ready for it. So why'd you say it? Yeah, you know, I keep ripping them up. New A, and it ends with whole. And that's because I have no respect for them. Lower highs, lower lows, momentum pointing to the downside. You can see how the market's staying over that. So even though you're getting a correction here in gold, this gold can pop on you. What will it take? If you take out Wednesday, not today's Thursday, Wednesday's high, you could end up with higher lows, higher highs. You've already had a correction where you're not overbought. You could start the bull move again. So my guess is if you take out yesterday's high, there will be an element of people at 188.47 waiting for that to occur. And they'll be saying, if you're going there, why can't we get back to the upper Bollinger Band? Again, do you wait for the jobs report to come out before you make any moves? I'll leave that up to you. I know what I'll tell my subscribers, but you're not paying me for that. This is free. Then we look at the big break we just had in SLV. This was the last break low. And as you can see, you've come down to challenge all that in this. Silver's doing the same, the futures. Now, in the futures, I've been telling clients, because these numbers, these averages are much closer to the 18-day average in there. I go, if you start accumulating here, just understand you got about $1.50, $2 risk, but you have a huge upside potential as well. And instead of full-size contracts in futures, mini ones. And, I don't know if they're doing it or not. I've given them ideas. That's all that it is. In the copper market, well, we have a pattern of lower highs and higher lows. I'm not in love with that pattern. The market's got momentum pointing down. The trend is up and the bias is up. It's a bit of a mess. The support's around 34.31. The resistance is pretty solid here at the upper Bollinger Band. Let's call that number 35.74. Well, yeah, I am right, 35.74. And to the 100-day average of 36.13, it's the green. So that's where the resistance is. If a gun were put to my head, I'm bullish, not bearish until you're back under that 18-day average. You're running the upper Bollinger Band. Are you getting excessive in TLT and BND and the notes and the futures? The markets will give us an idea if that's the case tomorrow. I don't go through reports like this and tell traders, hey, put this on, let's go through this. But I will tell you what I expect. Even a report that's bearish is probably going to be taken as bullish by midday. The market seems to be locked into this mindset that no matter what happens, the Fed is forced to drop interest rates sooner rather than later. The argument in the market, is it in March or is it June? That seems to be the time frame, and I'll let them fight that out because everybody wants to be the one that says, I made the right call. I told you it was March, and then if you didn't do that, doesn't matter. I told you that they were going to do it. You've been through this. I've been through this. I don't need to be the first guy on the street. This is a bull market. It's embedded. Hard break should be still supported. That's how I'm viewing it. And we're very close to an upside where you're going to get a reversal here, where the 18-day in red is looking at the 100, ready to get over it. Another good part. How do you take markets that have been down a long time and get them through moving averages with crossovers? So it takes time. It takes this type of action. I expected resistance, much bigger resistance, must say that, at the upper Bollinger Band and the green line, the 100, and you got over it. That day didn't bother me. It was actually the last 3 days that I'm going, much stronger. Because fighting the band close to the first challenge is always okay. After that, you ask yourself, what else is going on? Well, I can see the emotion of the market. Where's the market targeting? 97.56, the 200-day average. Because you've gotten over the 100 and because it's going to be supported with the 18, that's now support. That isn't resistance that you got over. Now it's going to change its role. I think the 200 will be a resistance role. In the dollar index, the dollar is getting neutral going into tomorrow's report, which is just what it should do. You have a lower low, a higher high. You've turned the bias back and forth. It's up going into the report. Can the market turn bullish? Yes. How? If you take out today's, not yesterday's, today's high of 29.43, that would give you higher lows. You already got the higher highs. What could turn the market bearish? Nothing. You'd need an outside day where you take out tomorrow's, whatever, you'd take out today's high and low tomorrow in the range and close lower. You don't go thinking about that. FXE, battleground, it's right in front of you, the 100-day average. Are we trending? No. There's been a vertical price decline as the markets are now saying in this. Miss Lagarde, and by the way, their meeting's December 14th. Miss Lagarde, you got it all wrong. You got to start cutting rates in March. Are you watching Germany? Are you watching Italy? Are you watching what is going on? We're going over the cliff. We don't have the business that we need. It's been tight enough. It's done. Now you start the cuts. And that they might be before the United States. I would expect it. Okay, their economy is weaker. So I am of that. Now, when they cut, you've already come down. Is that going to be bearish or bullish? It's bearish initially because they're going to cut earlier than the U.S. It's not as bearish at all once the U.S. is very close to beginning its cuts. Then it'll shift back. So it's always which guy's going to have the most out of good currency, the most interest you can pay me. By the way, you better start looking at the Japanese yen. The market is just the way it did in the bonds and notes in the U.S. It is saying that the government there is through with the zero interest rates. The marketplace has already said no more. It's done. Now let's see if a bank governor goes with it. He might. We talk about this a lot in our research. So while we're a futures firm, and yeah, no question, what do you think you're trading when you trade SPY, DIA, IWM, TLT, BND, GLD, SLV? I feel like I could do a song here. Okay, USO, USO. Well, that's what you're trading. They're based on the futures. A lot of them exactly based on it because that's what they're buying. They're buying and selling the futures contracts, and you're getting them in a derivative called an ETF. Period. So why not get the information, read about it, see what's going on? We talk spread strategies, option strategies, what the futures are doing, fundamentals galore. So how do you get this to take a look at it? Pretty simple. IraEpstein.com, free research. By the way, this does come, if you want it, in my research. If you buy my research from me, we get you this, we get you the price counts. It's quite a bit of stuff that you get. But you can go there, you can move your cursor to the top here, and away you go. In summary, tomorrow's a real important day. Tomorrow night, I assume I'll be doing the weekly review tomorrow night. That's what I'm counting on doing. I'll cover it in great detail after the report comes out, but and the word is but. If you're a subscriber of mine, the morning subscriber video that I'll put out around 9 o'clock, we already have the jobs report. I'll give you a full analysis in that at 9 o'clock tomorrow morning. I'm Ira. You have a good evening. I'll see you all tomorrow.